Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, Goldman Sachs pulls in more than $20 billion to invest in private credit, as well as that food delivery apps rack up $20 billion in losses in fierce battle for diners. So two articles talking about $20 billion, two in very different ways though. We've got lots to talk about in the charts, also with lots happening on the economic calendar. We'll come to that near the end, so make sure you stay around soon to see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is to do with Goldman Sachs. Now, Goldman Sachs has now gathered a total of $20 billion to invest into private credit, with this providing the investment bank with the firepower to dominate the industry. This comes in a new announcement by its asset management arm, which has now raised $13.1 billion for its fifth and largest senior direct lending fund, which will rank among the largest dedicated funds to write loans to companies across the globe, according to the FT. Now, this is, of course, a significant topic to cover, but kind of something that's probably more niche to what we usually cover on this channel, as really our focus on this channel focuses, well, I just said focus and this channel quite a few times there, but ultimately we focus a lot on this channel on the macroeconomic perspective, so looking at what's going on with the Federal Reserve, looking at what's going on with the ECB, Bank of Japan, Bank of England, that sort of thing. And that's ultimately because that is what is going to be affecting our kind of trades in the market, and yeah, our market outlook really, as that's kind of what drives often these swings that we do see in the market over time, and likely also influence the way that, kind of equities move, the indices which kind of accumulate all of them, and also of course, foreign exchange markets, which is a key topic on this channel as well. And we kind of combine that with kind of economic data, as we cover on the economic calendar and that sort of thing. And so our articles usually cover that kind of topic. So we'll look at, what's going on with the Fed, maybe something that's been said by Jerome Powell, but we also, of course, look at what's going on with companies and, what's going on with specific companies in particular. And here we're kind of focusing more so on what's going on with this specific financial institution, which we've done a few times on this channel. A few times we've spoken about JP Morgan, the new strategies being implemented by different investment firms and investment banks, with regards to the kind of changing macroeconomic climate. And of course here we're kind of talking about Goldman Sachs in particular, and we're relating this to private credit, which ultimately isn't an industry which we're always talking about on this channel, but still I believe it's relevant to the way we're kind of looking at bond markets, looking at the way that kind of firms around the world are structuring themselves during this macroeconomic climate, as we'll get into, as ultimately understanding what the larger firms within the world are doing with relation to the markets is so important, of course, since ultimately those are the kind of institutions which drive the market. Whilst the Fed can make their decisions and state certain things, and we've got politicians which might say certain things which will affect the market, at the end of the day it's these large investment banks and hedge funds like Goldman Sachs, on the investment bank side of things, of course, which drive the market and hold a great deal of power as a result of that. And with regards to private credit, Goldman Sachs is particularly dominant, basically, and has a very strong foothold in which it's looking to maintain. And that's largely what this article looks at, with its recent round of financing of $20 billion to basically put forward a stronger fund, which is focused, of course, on writing those loans to companies around the world and becoming, as a result, the largest senior direct lending fund. So a very important article here, but we'll get straight into it. With this large sum of money, including what Goldman has also raised from external investors, in addition to its own bank loans and backing, a further $7 billion has been raised from investors for the separately managed accounts, which will be used to invest into the same strategy. So an interesting point there with, kind of other investment or other investors also kind of using this strategy which Goldman Sachs is looking to utilize, but ultimately not being a part of Goldman Sachs' own kind of fund. Add to that $550 million, which is in a co-investment vehicle that will be that will lend alongside the fund. Goldman Sachs has been a long time leader in the private credit sector, which is now growing in popularity amongst insurers, pensions, and sovereign wealth funds. The reason why Goldman is now deciding to grow the amount of outside money that they manage is so that they can provide themselves with a more stable fee-based revenue system that will then complement their more volatile investment banking business. So whilst that kind of isn't a kind of point there which references, maybe the way markets will move and that sort of thing, ultimately that comment there on how Goldman Sachs is changing its kind of business model, of course, leads us to kind of think about how other investment banks may follow suit. And of course, should other investment banks follow suit, we could definitely see a very the markets and the way markets do move change greatly, as here it does seem like Goldman is somewhat diverting their attention away from the more volatile sector of investment banking and sales and trading, and more so directing themselves into this private credit sector as a part of their asset management business. Add to that the fact that Goldman is also looking to maintain their dominant position in the private credit industry. This seems to be an attempt to solidify that by offering their own strategy to other strategies Goldman's competitors are producing. Such rivals like JP Morgan and Bank of America do not have the same large-scale funds. And lastly, on the point of private credit, I think this is an interesting topic, obviously because we've covered the recent issues to do with credit availability as a result of the macroeconomic climate, and that's greatly affected the way that certain companies have been able to run, and this is something which directly relates to that. And so seeing this kind of increase in investment into private credit, and seeing or forecasting the idea that of course this could be reiterated across other different investment banks, makes a kind of very interesting outlook for investment banking, but also just wider markets. So that's something to think about as well. That's all to talk about in this article to do with Goldman Sachs, though. Next article to talk about is to do with food delivery apps. Now, the largest food delivery groups in Europe and the US have now amassed more than $20 billion in combined operating losses since the date that they went public. This comes as the fierce battle for market share continues between the likes of Deliveroo, Just Eat, and DoorDash, which are the three largest publicly listed food delivery businesses. Now, of course, this is a very interesting article covering this kind of, once again, more niche sector of business that we don't usually cover on this channel. But I felt that it was important to obviously mention, because we often do look at these kind of specific companies, as I said at the start, and I think that the kind of general industry of food delivery apps is a very interesting one, because obviously it rose greatly to popularity leading into the kind of quarantine period. And during the quarantine period, we obviously saw the likes of these food delivery apps such as Just Eat or DoorDash and that sort of thing really explode in popularity. And so I felt that understanding this business model is very, very relevant when we're looking at other kind of other equities maybe in the market which relate somehow to the food delivery industry, or even relate to the kind of trends that we've been seeing recently following the pandemic. So I think this does somewhat contextualize those issues that we're now seeing linger in these kind of apps and products that were produced and ultimately found their greatest success during the pandemic era, but ultimately now are likely to struggle during this kind of serious period of low consumer spending, or at least low purchasing power for consumers, and as a result we're seeing less of this demand for such products. But also we're seeing this kind of change once again where consumers are able to get outside again. as the quarantine period is now feels like it's long behind us, but ultimately things have changed since then, and we're seeing that across industries. But here with the food delivery apps, this is particularly an issue, which is it's not something that you can say for all industries, of course, which particularly struggled actually during the quarantine period, with the stock price of such food delivery companies trading below pre-pandemic levels. Whilst the pandemic fueled the growth of these takeaway-based business models, the companies are now struggling to compete in a tough macroeconomic environment, and now investors are beginning to scrutinize such a new business model, with the delivery companies now making a serious push to help demonstrate their profitability, to investors. That said, their cumulative annual operating losses have now hit $20.3 billion, according to the FT. The other food delivery rival, Uber Eats, has also reported that they have not broke out the operating profitability of its Eats business, but gains in the taxi sector made up for those losses. So, of course, offsetting those losses with a different part of their business, which is interesting to see, of course, as it does kind of paint this very pessimistic view on what these kind of food delivery apps can actually become. That's all to talk about on the articles, though. Interesting articles covered there. I think topics which we don't often cover on this channel, but I think were relevant to kind of mention as they kind of contextualize the issues and the changes that we're seeing in the post-pandemic world, especially when we're talking about markets. That's all to talk about in the articles once again. Next to talk about, like always, is the charts, where once again, I'm saying once again quite a few times, but ultimately, like always, we're beginning on the US 30, more broadly talking about US indices as a whole, but I'm happy to be starting off with the US 30 today, ultimately because we're seeing such crazy price action, really, which actually contradicts or opposes what we're kind of seeing on other US indices such as the Nasdaq and even the S&P 500, with the Dow Jones, as you can see just here, continuing this dramatic sell-off that we started to see take place last Monday. So last week's Monday, we really started to see price declining, as I kind of point out here with my cursor, with price really declining from those all-time high levels, and that continued throughout the entirety of last week. But as we did start off the new week, I did kind of point out the fact that price was sitting on this key area of liquidity, that it was very close to this 50% Fibonacci retracement level, and that there was a great chance that price would then be able to continue higher, utilize this area and swing to the upside. That said, we certainly haven't seen that, and instead we've seen price now break further to the downside as the week has progressed through Monday and Tuesday and Wednesday now, as we do head into Thursday. So very significant price action here. And the reason why this is so interesting to kind of note is because if we then take a look at maybe the S&P 500, whilst we have seen somewhat of a sell-off, ultimately price is still very much near those all-time high levels, and has most certainly not seen the same significant sell-off that we're seeing on the likes of the US 30. And the same can then be said for the Nasdaq, which once again, like on the S&P 500, hasn't really sold off much and is still within that kind of top level range. So the US 30 is really kind of in this unique spot where it's made its way back down to these old areas not seen since the more recent retracement that we did see as a result of the Fed's change in macroeconomic outlook. So that kind of change, which caused that large sell-off back in the end of March, start of April, which then reversed back on itself to continue higher starting off May, has now been reversed once again with this next significant retracement. And whilst this is kind of a pattern that we've seen a few times play out on the US 30, if we just look back historically, in comparison to other US indices, the US 30 is one which does range quite a bit, does move quite sideways, especially when we compare that to the tech-focused S&P 500. But ultimately, still the kind of the idea that price has now made its way back down to levels not seen since the start of the year is kind of crazy to imagine. And really paints this worrying picture for the industrial element of the US economy, which is obviously dependent on other factors, which maybe we don't cover as much on this channel. But ultimately, a change in the Fed's macroeconomic policy, I think, will still enable this kind of swing back again to the upside. But for the moment, we're really not seeing that come from the Fed, and so we're still waiting on some significant data for the Fed to make some comments and that kind of thing for price to once again swing back to the upside. And considering price is now broken below that 78.60 Fibonacci retracement level, it's hard to say where price will now stop off next, apart from this next area of liquidity down near this double bottom. So keep your eyes on the US 30. Next to talk about though is the dollar, which has actually swung to the upside over yesterday, and kind of this movement kind of began on Tuesday, of course, which we did mention in yesterday's morning market briefing, but I did also note that not much was happening to do with that swing. And pardon me, the significance of that swing was quite small, and so it was hard to kind of say where price was going, whether this was actually kind of another continuation to the upside, or in fact this was just kind of a moment of consolidation. But as we can see from yesterday's price action, price has ultimately continued this push to the upside and is now breaching above these most recent highs, so these kind of recent range highs. And should price break above that, obviously the next area of liquidity is sitting all the way up around 105.45, which is quite far to the upside in comparison to where we are now. So it will be interesting to see whether price can hold above this area of liquidity and possibly even make its way up to this higher area of price. So keep your eyes on the dollar. Next to talk about though is Euro USD, which has sold off significantly over yesterday, with price dropping below this area of liquidity which price was sitting on actually, and we kind of referenced the idea that price would utilize this area of liquidity to move higher to those higher levels of price around that minus 27.2% Fibonacci extension level, and instead we've seen price actually sell off and make its way down to this lower level of price at the bottom of this price range, which has previously acted as a strong area of resistance, but also a strong area of support. So it'll be interesting to see whether price now utilizes that area once again as an area of price support. Next to talk about though is pound yen, which whilst has continually pushed the upside in this slow persistent push, really for for a year or two now, but ultimately with the more recent sense, prices kind of had this long grinding push to the upside since the 3rd of May, and now we're ending off May, and of course price is now slowing down somewhat at these all-time high levels. As I did note in yesterday's morning market briefing that price was now breaching above those all-time high levels or recent high levels, which was very significant, of course, as that was above the 200 yens for a pound level, and now prices, of course, consolidating somewhat and holding for the moment at those highs. So price hasn't continued that push to the upside, and it'll be interesting to see now whether we can finally see somewhat of a retracement take place. Of course, the 6180 is a very significant level there, lining up with that key liquidity zone, but that's very far to the upside, very far to the downside, and considering the way price has moved recently, it's hard to judge whether price will actually make its way down there. Next to talk about though is Bitcoin, where not much can be said. Price is somewhat ranging, consolidating. Ultimately, not much is going on. Still keep your eyes on Bitcoin though, as it's holding above that $66 per Bitcoin, $66,000 per Bitcoin level, which lines up with this kind of key liquidity zone, which price has been holding above since the 20th of May. So keep your eyes on that level most definitely. As for gold, price we were expecting price to kind of retrace to the upside and maybe even make its way into this 3820 Fibonacci retracement level and key liquidity zone. Price fell short of that level and is somewhat sold off once again before making its way to that level. So it'll be interesting to see whether price will now continue to the downside, or in fact will price continue to gravitate to these higher areas of liquidity and Fibonacci levels before any movement is continued to the downside. Lastly to talk about on the charts though is obviously oil, which saw great bullish volume over the start of the week, but really yesterday that couldn't have been, that was not the case, and ultimately that key area of liquidity that we noted as a strong area of resistance acted once again as that strong area of resistance, with price selling off significantly from that kind of $85 a barrel level, and now prices retrace somewhat back down to the $83 mark. So look out for those kind of key Fibonacci retracement levels before price then continues to the upside. That's all to talk about on the charts though. Lastly to talk about, of course, is the economic calendar. We're receiving a great deal of data today, so make sure you listen out for all of this. Firstly, we're receiving the Aussie building permits figure, followed by the Swiss balance of trade figure, and followed by that the Spanish inflation rate figure. Back to Switzerland, we're receiving the GDP growth rate figure, as well as the Italian unemployment rate figure, and followed by that the Eurozone consumer confidence figure, as well as the Eurozone economic and industrial sentiment figure. Followed by that, we're receiving the Eurozone's unemployment rate figure, as well as the Spanish business confidence figure and the US GDP growth rate figure. That's the kind of most important figure of the day, so make sure you're listening up for that, as well as that kind of key Eurozone data which I mentioned as well. And to end up the day, we've got two Fed officials speaking as well. But that's all to talk about on the economic calendar though. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. Hope you have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye. I won't be here for tomorrow.